Hello everybody. Today I'm going to try to answer the question if crypto is going to head into a bear market, or is it currently taking a dip and is currently in the process of a multi-year bull market. First, I'll try to answer Bitcoin, what it's going to do in the short term. Then I'm going to try to answer or provide evidence for a multi-year bull market, and then I'm going to provide evidence for a bear market. And then at the end of it, I'm going to give my probability or judgment of which one of the two I think is going to be. So let's get started. So currently Bitcoin is sitting around 42,000 after having a massive drop at the start of November of around 41%. In the very near short term, I do think that Bitcoin is going to go up. So it's going to go up, and then I do think it's going to go up and then sideways, much like this right here back in May. If you notice the similarities between it, where there was it went sideways like this, pumped up, broke down. I do think that in the next couple of days we do go up and then head sideways and then back down and retest this low. So I do think it's very similar in that it went up, zigzag, broke it, went down, and I do expect it to take more or less the same amount of time as in the past. Since this drop, it was 29 days. So it's not unreasonable to assume that it's probably going to be another 29 days similar to that. Is it possible for Bitcoin to go lower as of right now? I mean, anything is certainly possible, but realistically, I don't think so, because using this indicator, this Kelter band indicator, typically when it drops like this, and it can break it once, but in a very short amount of time, it's very unlikely to want to break it. So in reality, it doesn't want to do that. If you look at Bitcoin in each of the individual time frames, let me go ahead and put in some of these other indicators. There's a lot of, this is called a Rob-Knox divergence indicator, and usually when this happens, it's saying that the momentum is slowing down and it really wants to reverse. So on the 1 hour, it's saying that it wants to reverse. On the 2 hour, it's saying it wants to reverse. On the 3 hour, it's also saying it wants to reverse. 6 hours, saying it wants to reverse. And on almost every single time frame, it's saying that it wants to reverse. So for the time being, I do think that we are going to go up. So if I zoom in, go ahead and zoom in. I do think that much like this, we're going to probably end up around 47,000. So if you look at it on this blue line, this ichimoku blue line, notice how it pumped up, touched this blue median line, and then went back down. So I do think that we are going to probably go up the next, today, tomorrow, or however long it takes to hit this, and then whether or not it pulls back down, I don't know, but it is very likely to get there's going to be a lot of resistance here, and more likely than not, it's probably going to hug this blue line and then break down. So I do think that's what's most likely going to happen in the short term. As of right now, as of this moment in time, if we put it on the 1 hour time frame, Bitcoin in the near term must try to break this red median line and go above this cloud, this Ichimoku cloud. It must try to do that in order for it to be considered safe to continue. If it doesn't do that and it goes sideways, then if it goes sideways for the next day or so, the likelihood of it breaking down is a lot higher. So we kind of need Bitcoin. If you're longing, we kind of need Bitcoin to break this pretty soon. So okay, so now I'm going to try and provide evidence for why Bitcoin is a multi-year bull market. So let's go ahead and start with that first. So on the daily time frame, on the weekly time frame, it looks like this. Typically, let me go ahead and turn off some of these indicators. So typically when the formation is like this, well, first off, in the short term, it's most likely gonna do the same thing as whatever it did here, right? So imagine if you had all these extra bars here. Sorry, let me go and try to draw that a little bit better. Gonna zigzag. So around February, it will be around here, right? If we have the assumption that it's gonna do something similar to here, it's gonna be right here. So in this scenario, when you bottom like this and like this, typically you're gonna make a very similar move. If you're gonna go up, you're gonna make a very similar not percentage move, but like a move similar to this. But you're not going to go all that high without having some sort of pullback. So in this scenario, I do think that Bitcoin has bled pretty heavily, but it doesn't mean that it can't reverse right here and up here and up here. In my opinion, I do think that it's probably going to go down, at least even here, before it can test and go even higher. So in terms of formation, if this is a multi-year bull market, it will need to do some sort of formation like this, and it's going to take a long time. Like, it's that type of formation, like you can imagine, right? Like you're not very likely to see a giant bar like this. That's just very unreasonable. It's very unlikely to happen. Like, to reverse right here all of a sudden is ludicrous. That's just not gonna happen. So let me try to explain the formation a little bit further. So using BTC divided by the money supply, so multiplied by 20,000, we get this chart. The money supply represents dollars being printed out. So this is how Bitcoin normally looks like, and this is with the money supply. It's a very slight change, but it actually matters a lot. So if you notice, right, if you remove the inflation rate, this drop here matched the high over here, versus without the money supply, it didn't. So so from here, we're going to analyze it using this money supply, removing the inflation rate, the US dollar inflation rate. We can now use Fibonacci to show where it's very likely to stop and why it's going to stop there. So in this example, right, if we use the Fibonacci tool, we notice that if we're right here, like during the week of September, one could have easily predicted the next high of Bitcoin, the next resistance of Bitcoin, using just the Fibonacci tool, where you would line up this 0.618 to this high and to this local bottom, and you would get to this. You would know instantly that it will get stopped here. So if we do the same assumption, then it's very likely that Bitcoin is going to get stopped at, well, we had to do a measure move, because it's not going to be the same percentage. It's going to be mostly the same because money, the percentage being printed out is not going to vary all that much. But if you want to get an exact number, it would be 35% from this recent high. So if we do it 35% from this high over here, it's probably going to get stopped around 90K. But we don't know. This is too far out. So we would have to see the formation in between it to occur. If we do a simulated move, right? So using a ghost feed between here, like suppose we copy from here from June of 2021 to say November, under those assumptions, at the very earliest, even before we hit 100K, would be all the way out in June. So this is going to take a while under the best case scenarios. So now I'm going to explain Bitcoin and the logarithmic regression and why it has to take this long. So even before anything, right? If you put this on a log scale, you can tell that Bitcoin, well, it grows logarithmically. So like if you notice, this is a logarithmic curve. So in theory, if someone had the correct formula, right, then they can technically predict the high of Bitcoin. So in 2014, someone did develop this. This was their version of the logarithmic curve, and this is his formula. So if you go to blockchaincenter.net under Bitcoin Rainbow chart, you'll be able to see what this individual has come up with. And based on his current logarithmic curve, he's saying that this is very still cheap and we still have ways to go. So this is but the caveat is that we don't know if this formula is correct. We don't know if his prediction is correct. Over time we will, right? Because you have more and more data, so you would know more accurately what Bitcoin looks like. So if we go back to his rainbow chart, right, and we analyze his prediction, since this was originally formulated in 2014, if we go back to his prediction, it was fairly accurate, right? Like in 2017, he managed to predict that it was gonna get stopped at 20K, which it did. So let's go ahead and try to zoom in on this one. Try to zoom in. So in 2017, he's making the prediction that the average price would be 10,000. But notice how like he said that in 2021 it's going to be 100K, which that has already passed, right? So we know that this is not as reliable as it seems. It's too aggressive. So the curve is too aggressive. The reason being is that when you're trying to create a logarithmic formula, if you have a limited number of data, a lot of those data are sensitive to the initial conditions. So if you have the wrong initial conditions, the projected curve is going to deviate from what is actually going to happen pretty significantly. So I mean, to be fair, for 2014 data, he did a pretty good job predicting up until 2020 or 2021. After this it does seem like it's falling apart. This is where you would have to update the logarithmic curve. So I guess that's one of the things I'll have to do to hopefully to figure out the exact top. But I guess that'll be for another day. But using the information that we do have, if we go ahead and go back to the chart, this is my version of the indicator of this logarithmic rainbow chart. Put it into indicator wise. Even just using the faulty data that we do have, under those assumptions, if we use this ghost feed, right, we know that it goes out into June. Goes out to June. For that high to be reached, assuming that we have a parabolic move towards the end of it, right, it does look like under the earliest time frame it's going to be June or July, right? If you can imagine like a couple more weeks up here, right? Just draw a couple more bars up here. It's very likely to end around June, July, or August. That's under the best case scenario. That's assuming that Bitcoin, triple bottoms, reverses right back up, pulls back when it needs to, goes up, pulls back and goes straight up. So under those circumstances, we're probably not going to reach the top until the summer of 2022. Historically, if you look at Bitcoin, right? Bitcoin, if we assume that this logarithmic curve is correct, right? Which it does seem like it's at least more accurate than whatever this one is. It does look like Bitcoin has never hit this green region. This is very similar to buy and accumulation phase, right? This is where you would want to buy. It has never hit this green region until after it has hit the top, and it has yet to do that, right? It has gotten very close in the early part of 2021, but we haven't quite gotten to that part. And you can also check it with Google Trends interest, right? So you go ahead and go to Google Trends, and you look up Bitcoin. You go and just simply look up Bitcoin. You can tell that the interest is not as hyped as it was back in 2017, which in every successive year it needs to be. So we know that if we have the assumption, right, if we assume that Bitcoin cannot go down unless it hits high, well, we know that it hasn't hit the high yet because the interest has not gone past this point. In every successive cycle, the interest must exceed. the previous one, because there's just more people, more money, more of everything. So we haven't hit the high, we haven't hit the maximum bubble area. So that's the theory of supporting, like, this is going to be a multi-year bull rally, because we have yet to hit that high yet. So that's the fundamental reason being. That's the fundamental reason. Do I think it's gonna hit in 2022, in summer 22? I mean, it's possible, but it's still too far out, so we don't have that in between data. I would say it's very likely going to be a little bit longer than what most people expected. So if it's August, in my opinion, it's probably going to be September, or even late 2022, if not into 2023. So at the earliest, it's in the summer, but realistically, it's probably going to be longer than that. The other theory supporting that this is going to be a multi-year bull rally is by measuring the time frame. So if you go ahead and measure the time frame, right, you can tell that the high hasn't been put in yet. The reason being is that let's go ahead and put this logarithmic curve back so we can see this a little bit better. So the common theory is that a lot of people have been saying is that, Bitcoin touches the high every 4 years and it pulls back, which from first impression, it does seem like that, right? 900 days divided by 3, that's 3 years, give or take. It seems like, it should be around 4 years. 3 years, what's the difference? 900, 1400, what's the difference? But in reality, it does matter a lot. So if you look at Bitcoin since its creation, starting from whenever it got created, it's around 300 days, 300 days, right, for the first pump, 900 days for the second pump, 1400 days for the third pump. So we must progressively get longer. So it has to be more than at least 1400 days, which that would imply that these are not the actual high, right? Because this would be 1100 days, this would be 1400 days. So under that assumption, it must be longer than 1400 days. So even this guy, whoever predicted this log curve, accounted for that, right? You can see he said 11 months in 1 day, 1 year, 3 years, 1 year, 3 months, 1 year, 10 months, 2 years, 6 months, 3 years, 7 months. So in order for us to get to 100K, we would have to, be longer than that. At this point in time, we do know that this is not as accurate. So I'll spend some time one of these days creating the exact formula, using, you would have to measure the time, right? You have to get the exact time. So, getting 910 days, you write all these intervals down, right? And you can create the log formula that way. You get both the time and the price movement, and you'll be able to formulate the own formula. But at the very least, there's another theory supporting it, that the next high has to be longer than the previous 2 highs, and we have yet to fully exceed it yet. So these two, although they may seem like it, they're probably more likely to be similar to here back in 2013, where it seems like a local high, and we had a double vicious pullback, but then we're likely to continue up. So that's another theory supporting it. The most accurate indicator that I found that is able to predict the high of Bitcoin using this logarithmic curve, like matching the logarithmic curve, is this pi cycle top indicator. So this is the version of it on TradingView. If you notice, it's able to predict 2013, this local high, this high, 2017 high, and this local recent high. My assumption is that because of both the time frame of 1400, like this time frame cannot match the previous, it must be longer. This would imply that this is in between, and we have yet to put another one. So you can just use this formula, like a person can use this formula and then calculate the number of days before we get up to those prices. So it's not until a while before these lines converges before you would know the top is it. So using this indicator, you would know when the next top would be. Assuming that assuming that this is not actually the high. So that's the theory that, this is going to be a multi-year bull rally. The final theory that I want to provide evidence for where this is a multi-year bull rally is whatever is happening now. This is more speculation than anything, but if these were actually Bitcoin high, then the past couple of days would have indicated that it would want to force its way down. Sorry, not the past couple of days, the past month, where this drop would want to go even further and breach into sub 40,000 level. Because if you put up the Bitcoin log zones, right, this would want to go all the way. I can't help but think that this being a very hard region, like the Kelter band wanted to reject, doesn't like this here, and a bunch of indicators, telling this one to diverge, makes me it is indicating to me that we are probably going to go, we are probably not going to breach this. Anything's still possible, right? Bitcoin doesn't have to hit these bubbles. It could be for the first time that it disrespected not hitting the all-time high and then just going straight through and then going up. Bitcoin can still do whatever the hell it wants, but it feels too coincidental for it to be, bounce off of here. Really, this is extreme selling. Bounce off of here, both off this log curve and this Kelter band, not liking where it is. It hasn't bounced yet, right? But that's the assumption, right? But all of these indicating factors are telling me that, there's a possibility that the multi-year bull rally is still alive. So based on this log curve, we can tell that this is a very crucial point, because if we bleed in here, then yes, we are going to go to a bear market, because historically this green region represents a bear market, and if it does breaches this, then yeah, anything sub 40,000 now is considered we're going to a bear market. We will die. It's not going to go to all-time high anytime soon. So 40K is an important point, because 40K represents the turning point of whether or not it's going to go bear or it's going to go bull, simply from this factor alone. So now I'm going to try to give evidence for the bear market. So just like I mentioned, we could go down, right? Even if we don't go down now, right, and we bleed out to February, at that point in time, it still can decide whether or not to go up or down. If on February, based on this curve, if we extended out the log, let's go ahead and just draw this line in, right? This is just a rough estimation, but assuming that we're done in February 2nd, right, then Bitcoin really cannot go below. It could nick below, right, and then bounce from there. But if we do bounce up from here, right, and it hits this point, it can still decide whether or not to go up or down. And the moment it decides to go down here, it's over. It's over. So we're still not out of the clear yet. We'd have to be back at 50,000, 60,000 region before we're out of the danger zone of this turning into a bear market. So that possibility exists. Bitcoin doesn't have to follow anything, and it hasn't. Even now, right? If you look at this graph, nobody could have predicted this to happen. Nobody, right? People would assume, if you extrapolate 2017, it's going to do the same thing. We're going to hit this high all the way up to 100K, super fast. Even the best of people, right, would assume straight up. But look what it did. It didn't do any of that. So even at this point, it can still go down. It doesn't have to hit this and go down. Bitcoin, that's the theory anyways, right? Bitcoin doesn't have to do the same thing. The other thing is, Bitcoin can take a long ass time here. Doesn't have to go high or low, just chill. But for me, that's the unlikely of the two scenarios. We're probably gonna make a decisive move, either today, sometime today, this week, or a month from now. And from there, we'll know for sure, right? If it breaks below 40K, not like wick down to 39,500 or 39,800 and then go back up, not like that, but like a full body candle into 37,000 hovering there. Then, but right now we don't know, so that's the gambit. The other thing you can argue is that this log curve is wrong, which is, it's still possible. This log curve was based off of this old one. I did modify a little bit to match the highs, but I do know that it's not fully accurate. But this is pretty good, all things considered. But if you go ahead and zoom out, right, on the weekly time frame, the curve could hit this local high, right? And it doesn't have to match. It would hit all these highs and hit this one and bleed out this way. Not bleed out, sorry. Extend out this way. So essentially the argument is that the curve is wrong, which is still possible. It's still possible. And the other argument could be that if we go ahead and put on the Pi cycle top, go to Bitcoin, BTC. Like this could be actually the top, and we're just we're just starting to start the bear market. So that's the theory. The theory is the log formula is wrong, which that's still possible. The other argument is the formation. So if we go ahead and put Bitcoin on, put all these other indicators on. This type of formation is very, very harsh, where it favors the downside more, because in order for you to go up, you would need to go, just as we did the ghost feed earlier, you would need to go up here, and it doesn't. Things don't typically like to do that. They like to, crypto in general doesn't like to do that. It likes to do a lot of cooling down and then cooling up. It doesn't like to triple top and then go up. This is not favorable for the upside. So that's the other evidence for bear market is, in order for us to go to the upside, we have to spend even more time in this region, and I mean, it's certainly still possible, but it's just, it doesn't like doing that. It makes quite a bit of sense to cool down. If you look at Ethereum, like go ahead and pull up Ethereum, right? Look at it from a very large perspective. For Bitcoin to reverse right now, Ethereum would also have to reverse too and do this, and that's excessive. We're gonna be hitting this high, and we've already made like what, a 50x. Like granted, if you compare it to the previous, it'd be like nothing compared to the previous, right? Where it's some ludicrous ass amount, but a lot of things are extended, like super extended. If you look at Luna, Ethereum, even Cardano, right? You go ahead and pull up Cardano. It's natural to assume that these things want to die, and without Bitcoin's assistance, it's very hard for it to continue on its own. But these coins, they do manage to do so. Like Litecoin, right? If you take out, even if you look at Litecoin, which seems more likely, like this, or pulling like this? I mean, we don't know until it happens, but just formation wise, instinctually, it tends to want to do this. Like once you get down to this point, you do want to, crypto tends to want to die and then find its way back up another time later. So that's the theory supporting the bear market. On a side tangent, if you had measured Litecoin, you would have been able to predict when Bitcoin was going to drop based on Fibonacci. So let me give an example. So from this high to this high, using this Fibonacci, from here to here, let me go ahead and put this on the daily time frame. So measuring like this local top occurring on January 10th, if we go ahead and look at Bitcoin on January 10th, January 10th. Sorry. January 10th. Notice how there was a drop. So the next drop, if you had to look at Litecoin, Litecoin divided by WMN2S. Is that right? 2NS. The next high from here to here. Sorry, let me go ahead and zoom in a little bit better. You've been able to predict this high, right? You've been able to predict this high. So then that occurred on February 19th. We go ahead and look at Bitcoin on February 19th. I'm going to save this Litecoin one before I do that. WM2NS. Go ahead and look at Bitcoin on the daily, February 20th. So go ahead, February 20th. See, it matches. And then if you do the same thing from here to here, you'll be able to predict that one. That will land on April 18th. Go ahead and look at Bitcoin. April 18th. Sorry, not April 18th. April 18th right here. Pretty close. Let me actually zoom in. April 18th. See the exact date of this one. April 17th. Sorry. So April 17th. Yeah. Close enough, right? If you managed to get out here, you would be pretty happy. And then it took a fat dump. Well, during this part, there's the alt rally. So also keep in mind this. When this happens, this will happen on the top. If there is going to be a top, this exact same situation will happen where this drop would indicate the final one because other things would start rallying. Litecoin itself would start rallying up here. And you would know that once Litecoin puts a top here, it's over. Like, you must get out. So for Bitcoin dropped, sorry, Litecoin, go back to Litecoin. Litecoin ended on May 10th. If you go ahead and look at Bitcoin, this is May 10th. You would have been able to avoid all this drop. So if we go ahead and measure Litecoin from here to here, right? You would have been able to also dodge Bitcoin drops using this. From high to low, September 4th, BTC. September 4th, no. And then this November 10th, so November 10th. Sorry, from here to here, right here. Because this is you're moving within this range, right? So you have to do the 0.618 from within the range. And given this removes the inflation rate, we're probably very likely to bounce off of here, which kind of lends itself to the February theory, where in February it goes down all the way here, right? And then we bounce back up. Because to die like this without any relief is unlikely. So this is another evidence supporting there's a bull market, where if Litecoin doesn't want to breach this low, which it doesn't, right? We don't have any relief right now. Like, this needs a relief. Then in order for Litecoin to do that, Bitcoin would have to drag the entire asset class up. So we're very likely to hit this 0.618 up here. So that's, but you know, if we look at it's very unlikely. It's very unlikely that we just straight up die here and go straight down. It's just, that's the difference. So although I may seem wishy-washy about it, it's because anything can happen. But yeah, now let's get into the question of like whether I think it's going to be bull or bear. I would say 70-30. 70% bull and 30% bear. I'm not ruling the possibility that bear market is not in play. It's still very much in play. Like, given today, it is still very much in play, considering how close we were to breaching the green zone, which would indicate that we're in a bear market, right? So, I mean, I'm not gonna pull up the chart, but that's the thing. Sorry, actually, I'll do that. Yeah, like we're super close. So 70-30. I would say 70-30, but we'll see. If it does breach it, assume that it's gonna be bear. Like, if you assume it's bear, then you can play according to that. So yeah.